Hello everyone, good morning and welcome to today's lecture. So today we are going to continue the topic of Audit Committee, Corporate Governance and LODR. In the last lecture, we discussed about some regulations. I showed you how the corporate governance certificate is there, issued by the statutory auditor. What are the roles and responsibilities of board of directors, different committees like audit committee, remuneration and nomination committee. We are yet to see for the other committees. We discussed some of the questions on these lines. We talked about the auditor's resignation. So in last lecture, we did this much. Today, our target is to complete rest of the regulations and to solve some practical questions on the line, on the same line of the regulations. Okay. Before starting the lecture, we have a doubt. Let's solve that doubt. In case, so the doubt is, in case an auditor of a public company has a reason to believe that the frauds amount to rupees 1.2 crore and he has reported same to the central government. However, later on, the fraud was examined and it was only 85 lakh rupees. So now the fraud is less than 1 crore. So will the central government consider such fraud as now it is less than 1 crore, and whether the auditor will have to face any subsequent of not able to identify the fraud appropriately? So it is with related to the Companies Act section 143 subsection 12. Okay. Now the answer lies of this particular question into the wordings of the provision. If you see, the wordings of the provision itself is of such nature that it provides auditor to report. Okay. Now, if you see 143.12, it says that notwithstanding anything contained in any section, if an auditor of a company in the course of performances of duties has a reason to believe that the offense of fraud of such amount or amounts as may be prescribed is being or has been committed in the company by its officer, okay, then he is to report in such manner. Now the question is, the word that has a reason to believe that the offense of fraud which involves or is expected to involve, so both the word involves or expected to involve are there in the provision, and it is if the auditor has a reason to believe. If you can justify that the auditor has a reason to believe at that particular point in time the fraud was of 1.2 crore and the expected amount, because even the rules also, rule 13, if you see the rule 13, it says the expected amount to involve, involves or expected amount to involve, both. In that case, if in a preliminary investigation, if you feel that amount is 1.2 crore, you can report, that is perfectly fine. And if later on the amount reduces, it is upon to central government whether they will interfere or not, or whether they will do whatever or it is required from their side. I cannot comment on that, but there will be no repercussions or no issues on the auditor till the time the auditor acted in a good faith and auditor had a reason to believe that the fraud was of 1.2. Okay, I hope I'm clear. So two things very important for that. One, the auditor has a reason to believe, plus there was an expected amount which auditor identified based on certain things and auditor acted in a good faith. If these conditions are there, then there won't be an issue on the auditor. Any other doubts with respect to any of the topic, guys, before I start today's topic? No? Okay, great. So let's continue today's topic. Before we proceed to the regulations, let's discuss one question for as a just revision with respect to yesterday's topic, and then let's see. Okay, so this is the question. PKP Limited was a NSE listed entity and a top 1000 listed entity based on its market capitalization. Okay, so top 1000 listed entity based on its market capitalization as on 31/3/2021. For the financial year 21-22, PKP board consists of Mr. Harish, Jatin, Yashika, Inder, Ram, Krunal, Prabha, and Asha. Out of these, Jatin was the chairperson of the board. Mr. Jatin, Mrs. Yashika, and Mrs. Prabha were non-executive directors. Moreover, Yashika and Prabha were also independent directors. You being the statutory auditor of PKP Limited, kindly assess whether the company has complied with the regulation 17 of SEBI LODR regulations or not. So this is the question basically. Now you need to identify whether the company has complied with the SEBI LODR regulation or not. So come on guys. All the details are given in the question. You need to revise or remember the regulation 17 and accordingly you need to answer this question. Come on. Come on guys. You need to just refer to the provision of regulation 17 and you need to accordingly see the question. What are the conditions of regulation 17 and how it's, the details fit into the question. I'm waiting for the answer, guys. What was regulation 17? Come on. Go one by one. First, chairperson. If chairperson is this, then what was the regulation? If we have this many directors, then what was the regulation? Everything with independent and everything. Come on, guys. Okay, good, Janvi. Very good. I received one answer. Very good. Okay, let's see. Now, first of all, let's go and let's see the regulation itself first. Okay, what we discussed in the regulation. And then we'll go back to the question. Now, in the regulation, what we discussed is, first of all, with respect to the chairperson, if chairperson of BOD, okay, if he is the non-executive director, okay, in that case, at least 1/3 of my board should be of independent directors. At least 1/3 of my board should be of independent directors. Okay, now I should have at least one woman director. And for top 1,000 listed entities, at least one woman independent director. Okay, so these were the conditions, first conditions that I need to fulfill. So let me check. Do I have one woman independent director because it's top 1,000 listed entities? So I need to have at least one woman independent director. So here, yes, Mrs. Yashika and Prabha were independent directors and woman independent directors. I have 2 women independent directors, so I satisfy the condition. That is fine. Number 2, whether chairperson is a non-executive or is not a non-executive. So the chairperson, Mr. Jatin, was the chairperson of the board, and Mr. Jatin, Yashika and Prabha were non-executive directors. Okay, so now the chairperson of the board is a non-executive director. So now, if he is a non-executive director, then as per the provisions, I need at least 1/3 of the board to be independent. Okay, let's see what my board consists of. So in board, okay, independent and others. So as of now, I have 3 directors which are independent. 2 directors, sorry, which are independent. Yashika and Prabha. Mrs. Yashika and Mrs. Prabha, they both are independent. Okay, fine. Okay. Then I have Jatin, Yashika and Prabha as a non-executive director. That is there. Rest of them, we don't have information, so we cannot consider them as an independent director. Rest of them will be non-independent or executive director, you could say. Okay. Another thing. If it is top 1000 or 2000 listed 2000 entities, top 2000 listed entities. Okay, 1000 also comes under the 2000. At least 6 BOD I require. At least 6 directors I require. Okay, so I need to check whether I have at least 6 directors or not. Plus 1/3 of independent. So let's see whether this is whether these conditions are being fulfilled or not. So I have other directors like Mr. Jatin over here, Mr. Harish, okay, Yashika, I am here, Mr. Inder, Mr. Ram, Mr. Prunal, and Mrs. Asha. So these are not independent directors, okay, but these are others falling into the other category. Okay. Then the another condition was minimum 6. So we have minimum 6. So the first condition, minimum 6, is fulfilled. Okay. Second, at least 1 independent woman director. So that is also fulfilled. Third, my main important condition, that is at least 1/3 of BOD should be independent. If I have a non-executive director as a chairperson, at least 1/3. Okay. Now whether this is at least 1/3 independent, so total I have 8 directors. In total, I have 8 directors, 6 others over here, and 2 independent. Okay. Now, out of 8, I need 1/3, okay, as an independent director, which is near to 2.6 in a fraction. But whenever you get a fraction, you need to increase to the higher side, means 3. Okay. You need to increase to the higher side. That is 3. Sorry. Okay. So in that case, it will become 3. If my independent director 1/3 to be 3, and in the current case, I have only 2 directors, which is less. Okay. Hence, in the current case, I don't have the required number of independent directors. In the current case, I don't have the required number of independent directors. I require 3 independent directors. Composition of the board is not appropriate. Clear? Any doubt on this question? Did you get the answer? Understood the answer? Did you understand the answer here? Like the third condition, very important, 1/3 of the board should be independent because my chairman is a non-executive director. And here in the current case, I have only 2 independent directors, okay, out of 8, which is not 1/3. And hence, this is not an appropriate BOD composition as per regulation 17. Clear? Not clear? Okay. If clear, then good. Okay, good. Let's do one more question. Okay, it's on the resignation of the auditor. Good question. Again, let us understand this question and then we'll try to answer. Mr. Shan was appointed statutory auditor for Om Prakash Autotech Limited, a NSE listed entity. Okay. After signing the limited review report for June 22 quarter, Mr. Shan decided to resign from the position of the statutory auditor. So he decided to resign from the position of statutory auditor due to non-cooperation by the management of the company. On 10/7/2022, Mr. Shan submitted all details to the audit committee with respect to non-cooperation. The audit committee met on 10/8/2022 as their quarterly meeting and discussed and provided their response to the auditor on 15/8/2022. Based on the response, the auditor resigned on 25/8/2022 and declined to sign the quarterly limited review for September 2022 quarter. Okay. Kindly guide the auditor with respect to the mandate on the resignation issued by the SEBI. Question number 1. We'll see the question number 2, but let's see question number 1. Kindly guide the auditor with respect to the mandate that is there. So, Mr. Sham has resigned on 25/8/2022. Okay. And he has declined to sign the quarterly review report for September quarter. For September quarter, as he has already resigned on 25/8/2022. Now you tell me what is the requirement basically of SEBI mandate or the circular that we saw yesterday and discussed yesterday in the current case with respect to the example in the current case. Come on, guys. What is the requirement of that circular? Come on, guys, quickly. What was the requirement of the circular and what is the current scenario? How you can link both? How you can link both? Come on, guys, quickly. Okay, good, Rahul. Good, Namrata. Good, Janvi. Good. Come on, guys. I'm still awaiting for other answers. Absolutely correct, Rahul. Very good. Okay. Come on, guys. So you need to think about, okay, what is the current scenario and what was the requirement of the circular? Very important. So you need to think from the point of view of requirement of the circular. I have received answer from Rahul, Namrata, Janvi. I'm still waiting for the other answers. Okay. Let us see the circular's requirement and then how it fits in the current case. Okay. So as per the requirement of circular, what was the scenario is? The scenario was that when an auditor resigns, okay, when an auditor resigns, within 45 days from the end of the quarter, he needs to sign the audit report of that quarter. But if an auditor resigns after the end of 45 days of the quarter, in that case, in that particular case, the auditor has to sign the limited review report, not only of that particular quarter, but of the next quarter. Okay. So he needs to sign a limited review report of both quarters. So this was the circular that we were discussing yesterday. See, if the auditor resigns after 45 days from the end of the quarter, before such resignation, he needs to issue the limited review or the audit report for such quarter as well as the next quarter. Okay. Now, in our case, the auditor has resigned on 25/8/2022. Okay. My quarter ends on June 2022. So the first quarter ends on 30/6/2022, that is June quarter. Now, if he resigns after within 45 days, then it is fine. He needs to issue only June quarter. But if he resigns after 45 days of the end of the quarter, if I consider after 45 days, like from this particular date, okay, if I consider 45 days, then the date will be that of 15/8/2022. Okay. Now, if he resigns after this particular days, this is a limit of 45 days. If he resigns after this particular date, then he needs to sign not only the quarterly report of such quarter which he is resigning, but he needs to sign the next quarter limited review report. So if he has resigned on 25/8/2022, then he needs to sign not only for the June quarter plus September quarter. Now, in the current case, he has already signed the June quarter. If you see over here, so after signing the limited review report of June quarter, so June quarter, there is no issue for us. So in the current case, auditor needs to sign September quarter limited review or audit report, then he can resign. So before resign, if you see the word, it is before resigning. It is not like after resigning you need to sign, but before such resignation, the report should be issued. Now the third condition says that if you issued all 3 quarters, then you need to sign the 4th quarter also. In the current case, it's not the all 3 quarters, hence the 4th quarter is not applicable. Clear? Any doubt? "45th day, you can take 14th August or 15th August, whatever you like, one day here and there. That is fine. Okay. Now, the second question that I want to discuss is also kindly guide whether the actions of the audit committee are appropriate in the current case or not. So the actions of the audit committee were appropriate as per the circular or not. You need to read the question, you need to see the circular, what was the responsibility of the audit committee in the current case and what audit committee has done from the circular's point of view, and whether it is appropriate or not, you need to reply on that. You need to answer on that. Come on, guys. See the circular and accordingly see whether the requirement of the circular has been fulfilled by the audit committee or not. Whether the requirement of the circular has been fulfilled by not, or fulfilled by audit committee or not. Come on, guys. Come on, guys. I'm waiting for the answer. So what is that the requirement that audit committee should have fulfilled? Come on. So you need to understand the requirement of the circular and accordingly you need to answer this particular question. A bit of tricky. You need to basically read the question, see what audit committee has done and what circular says that audit committee is required to do. Come on, guys. There could be a lot of things that, your answer is correct, Namrata, but we will see on the details which are given within the question itself. So, disclosing the information to the stock exchange within 24 hours from the receipt of the resignation is something we, as of now, will not discuss in the question because that's not there, whether they have submitted the detail or not. Rahul, a bit of change, not appropriately correct because the circular requirement is a bit different. Your area is correct where you are focusing on, but the circular requirement is a bit different. Come on, guys. Okay, let us see the requirement of the circular and then we'll discuss further. Okay. Now, what circular says, if you see, the circular says that the audit committee, basically, okay, in case of the concern that non-cooperation or non-availability of the information by management, okay, the auditor shall approach the chairman of the audit committee of the listed entity and audit committee shall receive such concern directly, immediately, without specifically waiting for the quarterly audit committee meetings. So they need to receive such request immediately without waiting for the meeting. Okay. Then audit committee is required to, required to deliberate and discuss on the matter, and then they need to provide the details to the auditor. Okay. So if you see the next one, that in case where the proposed resignation is due to non-receipt of the information, the auditor shall inform the audit committee the details of information explanation sought and not provided by management. In that case, on receipt of such information from the auditor relating to the proposal or to resign as mentioned above, the audit committee, board of directors as the case may be, shall deliberate on the matter and communicate its view to the management and the auditor. So they should not wait for their quarterly meetings. Rather, they should treat this as an urgent situation immediately without any specifically waiting. In the current case, if you see the audit committee, like the submission was done on 10/7/2022. Details submitted all details to audit committee with respect to non-corporation. Audit committee met on 10/8/2022 as their quarterly meeting and discussed and provided their response to the auditor. So they waited for their quarterly meeting, okay, and after a long period of time, at least a month, more than a month, okay, they replied back to the auditor, which should not be the case. Which should have not been the case, and hence the action of the audit committee are not appropriate as per the guidance that has been issued by the SEBI in the current case. Am I clear? Any doubt, guys? Any doubt? Okay. So in the current case, this is for the question. This is for the question number 1, which was with respect to. Now, for the question number 2, for the audit committee should have met immediately without waiting for their quarterly meetings to discuss the issue. Okay. As per the provision, the audit committee should have met immediately, which they have not done, and hence it is not appropriate as per the SEBI regulation or SEBI guidance or the circular. Correct, Namrata. But in the current case, like we can say, if the information has not given, we can assume they have discussed with the management. But if that information is specifically said, written, that they have not discussed with the management and they directly communicated to the auditor, then it will be a problem. But here, the point is not that one. The point is on the reply that has been provided, the time period within which the reply has been given by the audit committee, that is not appropriate. Okay. Any doubt with respect to this question? Any doubt? No? Okay. What I'll do is I'll tweak this question a bit to understand further. Very important question, very important doubt that has come here. In the current case, it appears that the audit committee has intentionally delayed the resignation process of the auditor so that they can make auditor responsible for issuing another audit report or limited review report for the September quarter. Whether the auditor can consider this as a reason for not issuing the report. Okay, very good question. See, there has been delay from the side of audit committee. Okay, but that never stopped auditor from resigning. Auditor can render his resignation if he is seeing that okay, audit committee is not replying within the time frame. But again, that is a question for another discussion. That is very subjective one because there are lot many things which can be which are required to be seen in the picture. Number two, if an auditor is in a situation where he cannot issue a report because he is not getting the data, because there is a limitation on the scope of either audit or the quarterly limited review that he is performing, he can issue disclaimer of opinion. No one has stopped auditor from issuing a disclaimer of opinion or a modified opinion as per 705. Okay. So in case when the auditor is required to issue an opinion, but he's not getting the data, he's not getting the cooperation, there's a huge limitations, you can issue a disclaimer of opinion by mentioning all those things. So again, but whether the auditor, whether the auditor can let's say that okay, because of there is a delay from the audit committee side and all those stuff, that is a very subjective one. Rather not, we'll not discuss that because it is based on a lot of other factors. Okay. So let me tweak the question number second a bit and then we'll see whether it is the same or not. Okay. So till now we were talking about Mr. Shyam being appointed for Om Prakash Autotech Limited NSE listed entity. Okay. I'll change the question. I'll change the question a bit. In above question, assuming Mr. Shyam was appointed auditor of not Om Prakash Autotech Limited, but Ved Prakash Autotech Limited a fully owned subsidiary of Om Prakash Autotech Limited. Okay. This particular company, that is Ved Prakash Autotech Limited, is not a listed entity. Prakash Autotech Limited is not a listed entity. Okay. Then I'll provide some more details for you to understand the question. Okay. The total income of, I'll write VAL as a Ved Prakash Autotech Limited in the short form. Okay. The total income of VAL, okay, was rupees 35 crores and the total income, okay, the total income, or rather than I'll use the word total consolidated income of total consolidated income of Om Prakash Autotech Limited, because it's a holding company. After consolidation of its all subsidiaries, income of Om Prakash Autotech Limited. Okay. And the total income and the total consolidated income of Om Prakash Autotech Limited was rupees 200 crores for FY 20 2021. FY 2021, this was a scenario. Now, considering all other scenarios same, like Mr. Sham resigned on 25/8/2022 from VAL's auditor position. Now here also quarterly reporting was applicable because being a listed subsidiary of a listed entity. Okay, so the quarterly reporting to the group was required. Mr. Sham issued June quarter limited review report to Om Prakash Autotech Limited for purpose of consolidation. Or you can say consolidated reporting. Now, the audit committee of Ved Prakash Autotech Limited is forcing Mr. Sham to issue limited review report for September quarter also. Kindly guide auditor with respect to the requirement as per SEBI circular. Now, understand in the current case, there are two companies. Till now, we were discussing only one company. Okay. We were only discussing one company, but in the current case, what we are seeing, there are two companies. And in the current case, these two companies are Ved Prakash Autotech Limited, which is a fully owned subsidiary of Om Prakash Autotech Limited, but the same Ved Prakash Autotech Limited is not a listed entity. Okay. Number two, Mr. Sham, like in the current case, I changed a bit that Mr. Sham was the auditor of VAL, that is Ved Prakash, VAL, not Om Prakash Autotech, which is a listed entity. So he was the auditor of subsidiary of a listed entity, but not of listed entity. Now, income was given that, okay, the income of VAL was 35 and the consolidated income for was 200 crores for FY 2021. Okay. Now, Mr. Sham resigned on 25/8. He issued a quarterly review report, okay, limited report for June quarter. Now, audit committee, okay. Now, the audit committee of VAL is forcing Mr. Sham to issue limited review report for September quarter also. Now, you tell me whether the requirement of SEBI circular will be applicable in the current case or not. If yes, then is the auditor required to issue the September limited review report or not? Come on, guys. So VAL, just to summarize, VAL fully owned subsidiary of OAL. Okay. This is listed, not listed. Auditor was of this Mr. Sham. He resigned on 25/8/2022. Okay. There is some income detail that I have provided in the current case. Now, Mr. Sham issued June 22 quarter limited review report. But audit committee is asking them to issue September quarter limited review report also. Okay, under the SEBI circular. Now you tell me whether audit committee is allowed to do that or not. So it is, again, I'm saying auditor is not of the listed entity. It is not a listed entity. Whether still the auditor is required to issue the limited review report for the quarter, whether still the requirement of the SEBI circular be applicable in the current case, whether the SEBI circular will be, like, think about from the circular's point of view, what is the requirement of the circular, and see whether the circular will be applicable in the current case or not. Is circular applicable in the current case? That is the first question that you need to answer. Is circular applicable in the current case or not? Good, Rahul. Appropriate. Very correct, Namrata. Come on, guys. Whether this circular is applicable or not. If yes, then why? I need the answer why also. Very important. Very important. I just want to understand why also. Because the why is very important in the current case. That is the clarity that we are expecting to have from this particular answer. Come on, guys. Very important. You need to understand from the point of view of circular. That is very, very important for you. Viraj, I'm not able to understand your answer. It's not appropriate. So, guys, I want with answer why. Like Rahul, with the reason, like why you say it is applicable or not applicable, and accordingly you need to give the answer. Like with why. That is very important. Come on, guys. Okay. So, see, in the current case, I'll tell you one thing. In the current case, what you need to do, what you need to understand, okay, is whether this circular is applicable to the subsidiary or not. Okay, whether this circular is applicable to the subsidiary or not. Now, to understand that, you need to understand two things. Number one, what my circular is saying with respect to the subsidiary. Okay, and whether that requirement is getting fulfilled in the current case or not. Okay, so let's go and understand the circular first. Whenever I read a circular, okay, wherever I see two things. One, it's not all about all listed entities, but it's about material subsidiaries also. If you see everywhere, I read the word material subsidiary, all listed entities and material subsidiary. So it is about listed entity plus material subsidiary. It's not only the listed entity. Okay, so it's applicable to the all listed entities and material subsidiaries. Okay, now when I talk about material subsidiary, what that it means, like what is the definition of material subsidiary? Now the definition of material subsidiary lies in the regulation itself, LODR regulation. Okay, so there is a regulation 16, okay, in LODR regulation, which talks about material subsidiary. So LODR regulation 16 talks about the definition of material subsidiary, which says that, okay, if I talk about the definition, it says that, I'll show you the definition itself. Material subsidiary means a subsidiary whose income or net worth exceeds 10% of the consolidated income or net worth respectively. of the listed entity and its subsidiaries in the immediately preceding accounting year. Okay. So if it exceeds 10% of the income or net worth, 10% of the consolidated income or net worth in the immediately preceding accounting year, then it becomes material subsidiary. Now, in our case, the income was 35 CR and the total consolidated income of the company was 200 crores. Like if I take out the 10% of the total consolidated income, that will be 20 CR. Okay. So in our current case, the income is rupees 35 CR, which is more than 10% of consol income. Okay, which is consol income is 200 CR. And this becomes a material subsidiary. Hence, VAL is a material subsidiary. If VAL is a material subsidiary, by default, this circular will be applicable. And in the current case, auditor has to sign the September because it is a material subsidiary and SEBI circular is applicable to a material subsidiary also. Hence, SEBI circular is applicable. I hope I'm clear now. So, in the current case, the SEBI circular will be applicable. The auditor has to sign the September quarterly limited review report or audit. I hope I'm clear. Any doubt till now? Any doubt? Any doubt? Okay. No doubts? Okay. No issues. Let us take one more question, a good one, and then we can continue for the rest of the topic. Let us continue one more question. Just a minute. So this question is in continuation with the question that we discussed, question number 1, the board of directors question. Okay, this question is in continuation with that, and accordingly we'll see this question and answer this question. Okay. Just a minute. I think there is some just issue. Just give me a minute. I think there is some. There is some technical glitch. Apologies. Okay. Sorry, there was some technical glitch. No issues. Okay, so this is the question, which is in continuation with the question number 1, where we saw the number of directors and everything. Okay, now what this question is, assuming in the above example, number 1 that was there, Mr. Jatin, Yashika, Mrs. Yashika, Mr. Ram, Mrs. Prabha are the independent directors. So earlier our question where we found an issue that the independent directors were less. Now let's assume the number of independent directors is well within the limit. Good, fine, okay. Now BOD meeting was in total 5 times in a year on the below mentioned date. Okay, which are the dates? 10/4/2022, 18/8/2022, 28/2022, 11/11/2022, and 10/1/2023. In the meeting on 28/8/2022, only Mr. Krunal, Harish, and Inder met. Others could not meet due to some personal emergency. Now you need to guide whether the provisions of Regulation 17 and 17A of SEBI LODR regulation are complied with or not. So, in continuation to the above question, this is a question. Okay, so first I'll explain certain things which were there in question number 1. In question number 1, what we understood is that there was minimum 6 director required. They are there. At least 1 woman independent director was required. That was there. However, the issue was that 1/3 of the board was not independent. Only Ms. Yashika and Mrs. Prabha were the independent director. We required 3 independent directors. Okay, that is 1/3 of 8, but we had only 2 instead of 3. That was the problem. Okay, in the current case, we have total independent directors, Mr. Jatin, Mrs. Yashika, Mr. Ram, and Mrs. Prabha. 4 independent directors, 4. And others, we have Mr. Krunal, Mr. Harish, Mr. Inder, and Mrs. Asha as the other directors, which are not independent. They are also 4. So that is the current scenario. Now, there is some additional information given with respect to the meetings. So the directors met on 10/4/2022, 18/8/2022, 28/8/2022, 11/11/2022, and 10/1/2023. 5 times in a year. Plus, they met in the meeting of 28/8/2022. Only Mr. Krunal, Harish, and Mr. Inder met. Now you tell me whether the regulation 17 and 17A has been compliant in the current case or not. So you need to understand whether the regulation 17 and 17A has been complied or not in the current case. Come on, guys. Look and remember, see, there is something with respect to the meeting of board of directors. I'm giving you the hint. Okay. So think about the provision with respect to the meeting of board of directors and what is in the current case. Come on, guys. You need to understand what is the basic requirement of regulation 17 and 17A, and accordingly you need to answer the current question. Come on, guys. Pretty simple, nothing difficult here. Just directly apply the provision. That's it. Directly apply the provision, and that's it. You need to think from the audit provisions point of view, and then you need to apply provision here. Think what is the provision, what is the requirement, and accordingly you need to apply the provision. Correct, Janvi? Okay, good, Rahul. But I want specific answer which you are talking about, which meeting you are talking about. Okay, and there are two things in the current case. One, you have answered, Janvi, or Rahul, you have answered, but I want specific. Absolutely correct, Namrata. That is one of the things. The thing you have answered, that is one of the problem that you have identified. There is one more. There is one more that you need to look into. Come on, guys. So you need to accordingly think there is one more requirement of the same regulation that is applicable in the current case. There is one more requirement. Which is that requirement and how it is fitting in the current case, you need to answer. Absolutely correct, Janvi. Absolutely correct, Namrata. Okay, so let us see the regulation and let us see the answers here. So regulation 17 and 17A that we discussed talks about something on the meeting of the board of directors. Let us see what is that regulation. When I talk about meeting of Board of Director Regulation 17.2, it was 4 times in a year with a maximum gap of 120 days between 2 meetings. That is the first requirement of Regulation 17.2. Okay. So there should be at least 4 times in a year. So they are meeting 5 times in a year. I'm fine with that. No issue. But there should not be more than 120 days gap between 2 meetings. Okay. So let us list down the date first. Dates of meeting. Okay. What are the dates of meeting? 10/4/2022, 18/8/2022, 28/8/2022, then 11/11/2022, and then I have 10/1/2023. Now you will feel that, okay, how to identify the period between both of them? It's very difficult to do in number of days. I'll give you a quick shortcut for that. Focus on the month. And then you can decide. Okay, from here to here, you have at least gap of 4 months. Okay, gap of 4 months, which could be your 120 days or more. So that is a suspected case. Here there is no gap. Basically, it's the same month. So I don't see a gap of more than 120 days. Fine. Again, here from 8 to 11, if you see, okay, from 8 to 11, it is near to 2 months. Again, I'm fine. There is not that much gap. So it is only near to 2 or 3 months. Okay. So again, it cannot go more than 120 days. From 11 to 1, basically it's 2 months only. Okay. Again, I'm fine with it. It will not go more than 120 days. So prima facie from top, I can see, okay, the other meetings are within the limit of 120 days, but except for the first meeting where the gap is 4 months, near to 4 months. So I have a doubt of days in that particular area. Here I will consider the number of days in order to identify whether it is more than 120 days or not. So you can say, let's say, okay, for example, for the month of April, okay, for the month of April, how many number of days that is there basically. So I need to consider that. So, okay, for month of April, 20 days that has been passed. Then May, again, it will be 31 days. June, it will be 30 days. July, 31 days. And then comes the August, that is the 18 days. Some might take, okay, 18th is a one where the meeting has been done. I will take the 17th. If you total it down, all these days, basically, okay. If you total it down, all these days, you will get total 129 days, which is more than 120 days. Okay. So the gap between two meetings here is 129 days, more than 120 days. Now that is a problem for me because the gap between two meetings should not be more than 120 days. Okay. Should not be more than 120 days. And accordingly, this is an issue. So here, this should not be more than 120 days. So that is the first problem that I have identified, a non-compliance to regulation 17.2 of the SEBI LODR regulation. That is fine. Number one. Number two, meeting. So I have a details of meeting on 28/2/2022 where only Mr. Krunal, Haresh and Inder met. So Krunal, Haresh and Inder, all three are not independent. nor non-executive. Okay. So they are the normal directors, not the independent directors or non-executive directors. Okay. Now what my regulation 2A speaks of SEBI LODR regulation, that the quorum for the top 2000 listed entities, okay, top 2000 listed entities should be 1/3, and my provision talks about top 2000. Again, it falls. So if it is a top 1000, by default it is a top 2000. So that is applicable. Quorum for top 2000 listed entities, and it will be applicable in the current case. So regulation 17(2)A is applicable. Now, if regulation 17(2)A applicable, so the quorum should be at least 1/3 or 3 directors. Okay. Quorum should be at least 1/3 or 3 directors, whichever is higher. So in my case, what is the 1/3? I have total 8 directors. If I talk about 1/3 of 8, okay, if I talk about 1/3 of 8 directors, basically, it gives me 2.67, which is equal to 3 directors, or 3, whichever is higher. So 3 versus 3, you will get the 3 directors. So the quorum is 3 directors for me. Okay, that is the quorum. In the current question, it is given that the Kronal, Harish and Inder met. 3 directors met. So this is satisfied. Fine. 3 directors met. My quorum is satisfied. Perfectly fine. However, the another condition is that at least one independent director should be there. However, in my case, out of these 3 directors, no director was independent. If none of the director was independent director in this particular meeting of 28/8/2022, because neither Krunal, neither Harish, neither Inder, they are not independent directors. Hence, regulation 17(2)A, non-compliance to regulation 17(2)A for the meeting of 28/8/2022, because none of the independent directors were present in that particular meeting, being a top 1000 listed entity or top 2000 listed entity. Clear? So this is how you can go and you can check whether the regulations are being complied or not. I hope I'm clear. Correct, Namrata? Correct, Janvi? Correct, Rahul? So this is how you need to answer the question. You need to look into the provisions. You need to see what is given in the question, correlate both of them, and then you need to answer. Any doubt, guys? Any doubt till now? Whatever we have questions we have seen. Are you understanding the topics and the practical application of the topics which are there? Are you understanding the topics and practical application which is there? Okay. Yes, it's less than number of days between 10/1/2023 is less than like 120 days. So I'm not going in that particular way. So I'm only checking 10/4/2022 and 18/8/2022. So 10/1/2023 and 11/11/2022 both are less than 120 days. So that is fine for me. See, to remember the limits, you need to practice. The only way to remember anything is to practice. Trust me. If you will practice the questions, if you will try to answer the question by your own, if you will practice the topic, questions of that topic, you will remember. By only reading, it is very difficult to remember things. Okay. By practicing, by writing the answers, yes, you will remember. Trust me. I'll give you a quick tip that I used to follow in my days. At times, I like today you have a lot of material available, a lot of details, questions, everything is available on ICI portal. You can solve, questions from last exam, last 5 exams or whatever. A lot of details are available. But let's say, for example, if you are still facing some issues with respect to any of the area, you are facing that, okay, you don't have questions. Okay. You don't have that much thing to practice. You can form your own questions. Trust me. When what I used to do is I used to form my own questions, own practical problems at the time when I used to, study for the CA final. Why? Reason because while forming the questions also, I used to understand the particular provision. Even today also, when I draft a question to discuss in the lecture, I need to understand the provision first. Okay, what is the provision? How it can be fit into a particular question and what could be its answer and accordingly. So it takes a time, but it helps understanding the provision and helps understanding the answer of the provision or the question that you are drafting. By this way, you will remember the question also, you will remember the provision also. Okay, so at times I used to do that for the topics which are very difficult to remember and for the topics where I used to not find the questions, appropriate number of questions. But again, what I'm saying is, in the current scenario, there are a lot of questions available on the ICI portal, ICI material, last exams, mock test papers, a lot of things are available. First, try that. And then try something different if you have time available with you. Okay. Now, just on a practical side, I want to show you guys some things like auditors with respect to auditors resignation. So as I told you, when an auditor resigns, he needs to comply with the provisions of the circular. And how it is complied, I'll just show you with one example. Just don't focus on the company's name. This is publicly available data that I have taken out. Okay. So what happens is when the auditor resigns. So when an auditor resigns, auditor submits a letter to the company. So see, this is a letter that has been submitted by the auditor to the board of directors. Okay, to the board of directors, basically that has been submitted on a particular date. Okay, that is a resignation as a statutory auditor from whatever the company name is. Okay, they talk about that we were appointed as a statutory auditor of the company at this particular general meeting, pursuant to the discussion with the management of the company in response to the email dated this, citing management preference to appoint another auditor to ensure the continuity of the audit service. They requested auditor to submit the resignation. ADT was filed with the ROC. Everything is done with this now. Further, as required by this circular that we were discussing, 114 of 2009, please find the attached detail in Annexure 1. Okay. So this is the detail that the auditor is required to provide to the company that we saw in the circular, the annexure, name of the listed entity, details of the statutory auditor, phone number and everything. details associated with the listed entity, date on which the appointment held, date on which the term of statutory auditor was scheduled to expire. 3 years would have expired at the AGM of this. Prior to the resignation, the latest audit report or limited review report submitted by the auditor. So we conducted limited review on the financial results of the company for quarter and 6 months ended on 30th September 2021 jointly along with one more auditor and issued our joint review report on this particular date. Details reason for resignation. As stated in the covering letter, the decision of the company of the management was to ensure the continuity of the audit service for next 3 years, which was not possible beyond April 1, 2022. Hence, their request was received by us and based on the further mutual discussion, we submitted our resignation as the statutory auditor. So if there are concerns with respect to the efforts made by auditor prior to resignation, including approaching the audit committee, board, something like that, so they need to write it here, but here it is none. If there is inability to obtain sufficient appropriate audit details, so that will come here, but in this case it's none. Any other fact? None. And some certain declarations are there, like there was no material reason other than those provided for the above resignations and everything which is attached over here. And accordingly, this resignation was tendered on 13th November, and the same day, disclosure under Regulation 51 of the SEBI LODR regulations was made by the company to the stock exchange. Okay, so this is how the flow of the resignation works. I have one more example to show if I'm not wrong. Yeah. So here, see, it's not always the resignation is because of the not availability of the information or non-cooperation, but it could be because of other reasons. Like in this case, the reason for change was pursuant to the guidelines which were issued by RBI. Okay, that our statutory auditor became ineligible to continue as a statutory auditor, and hence they tendered their resignation. So RBI recently, in 2001, RBI issued a guidelines with respect to being an auditor of a NBFC for a maximum period of 3 years. So there was some guidelines issued, and accordingly, based on those guidelines, certain auditor became ineligible to continue as a statutory auditor, and they had to tender their resignation. Okay, and this was the case. Rest of the details are there. So, see, like on 10/11/2021, the resignation was tendered by the statutory auditor based on the RBI guidelines, the new guidelines. And on the same day, 10 November 2021, the company issued as per the regulations, listing regulations, plus the auditor has issued the details which were required in Annexure 1. The format is a bit different, but the details are the same. Okay, so this is how in real life also the resignations of the auditor work. Just to show you the practical example of the resignations. Any doubt, guys? Any doubt? Any doubt, guys? In case of there is a resignation from the auditor or removal of the auditor, Section 140 of the Companies Act will be applicable with respect to the vacancy. Okay, so section 140 is required to be seen in the current case. Okay. Okay. If no further doubt, then guys, what I'll suggest is let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the topic. Okay, let's take a quick 10-minute break. And welcome back to the lecture. So now we have seen a lot of practical questions on the topic that we discussed yesterday and today. In addition to that, I have certain regulations to cover. Okay, let's cover those regulations first, and then we will see some more on practical on those things also. Sorry. Okay. Till yesterday, we saw about the audit committee, we saw about the board of directors, but there is something more that I want to discuss. Okay, with respect to the board of directors, there is in regulation 26. Okay, regulation 26 basically provides detail about maximum number of membership a director can have basically in committees. Okay, so maximum number of memberships in various other committees. Okay, so that is the regulation 26. Now, what regulation 26 talks about? Regulation 26 is not only applicable to board of directors, but it is for all the committees. Okay. Now, what regulation 26 says? Regulation 26 says that the director shall not be a member in more than 10 committees, or shall act as a chairperson in not more than 5 committees. Okay. Shall not be a member in more than 10 committees or act as a chairman of more than 5 committees across all listed entities in which he or she is the director. Okay. So the first condition for my maximum number of directorship is director cannot be a member in more than 10 committees. Okay, and because chairmanship is along with that, so also director cannot act as a chairman. I'll continue with that. Cannot act as a chairman in more than 5 committees. Okay, so a person cannot act as a member, or a director cannot act as a member in more than 10 committees or act as a chairperson of more than 5 committees. Now that is across all listed entities. Across all listed entities. Okay. Now, the limit of 10 committees or 5 committees, there are certain things which are required to be excluded. Okay. The limit of committees on which a director may serve in all public limited companies, whether listed or not, shall include all other companies, including private companies, foreign companies, high value debt companies, companies in the Section 8 of the Companies Act. Okay, all other companies. But now the point is, these companies are required to be included on certain specific scenarios. Otherwise, these companies are required to be excluded. Okay. And so if I have to say exclusion or inclusion, so I'll write inclusion first in these listed entities. Inclusion first. So what are the inclusions? That all public limited companies, whether listed or not. However, what is the exclusion from this? That is very important. Exclusion is, as I told you, all other companies, including private company, foreign company, companies under Section 8 and high value debt listed entities. So what is excluded? Private limited. Then Section 8 company. Then foreign company. And then high value debt listed entity. These are the exclusions from the listed entities which are counted for the committee. So when I say he cannot be a director, cannot be a member in 10 committees across all listed entities that exclude committee membership in private limited, Section 8, foreign company, high value debt company. Okay. Now, for the purpose of determination of limit for chairmanship and membership, audit committee and stakeholder relationship committee shall be considered alone. Means you are not required to consider other committees, but only audit committee and stakeholder relationship committee. So for the purpose of determination of limit, only, okay, audit committee and stakeholder relationship committee alone shall be considered. So when I will consider these limits, I need to consider audit committee and stakeholder relationship committee. Okay. I will not consider other committees like nomination and remuneration committee or risk management committee or whatever committee it may be. I will only consider audit committee and stakeholder relationship committee. Okay. Only consider above committees for counting the limit and only consider all public limited companies listed or not for counting the listed entities in which the director is a member of audit committee or stakeholder relationship committee. Okay. Now, every director is required to inform the listed entity about the committee position he or she occupies in other listed entities, and with change they need to notify the change to the listed entity also, so that the listed entity can be aware of that, okay, whether this limit is being breached or not. Now all board of directors and senior managerial personals are required to comply with this particular thing, and they need to look into continuous compliance basically in the current case. Okay, so that was regulation 26 with respect to your maximum number of membership in a committee. Now there are other requirements of regulation 26 that I'll discuss in a while, which are with related to disclosing the interest that the senior management or board of directors have with respect to any of the commercial transaction. So that I'll be discussing in a while. But before I go to that, I need to discuss about high value debt listed entities. Okay. High value. In that case, there is a provision, okay, regulation 15, which talks about what is a high value debt listed entities. Now, I'll explain that. Regulation 15(1)(a) provides certain kind of entities, and there was later on, explanation added to clarify these are known as a high value debt listed entities for the purpose of this whole chapter. Okay. Now, what this regulation says, 15(1)(a). 15(1)(a) talks about, and only it is limited to regulation 16 to 27. Okay. Regulation 15(a) talks about that listed entity which has listed its non-convertible debt securities an entity which has listed its non-convertible debt securities and has or have an outstanding value of those listed non-convertible debt securities outstanding value of those non-convertible listed debt securities of rupees 500 crore and above. And above. If that is the case, then it will be considered as a high value debt listed entity. Okay. So if they have an outstanding listed non-convertible debt securities of 500 crore and above, it is a high value debt listed entity. Okay. So that is a definition that is given under regulation 15(1)(a). Now, this was with respect to the maximum number of directorship. Maximum number of directorship. Okay. Then there are certain other regulations or committees that I need to discuss, which is pending, which is one, Stakeholder Relationship Committee, second, Risk Management Committee. Okay. So let us see quickly those committees, the regulations that are there for those committees, and what are the provisions under SAB LODR regulation. Okay. First, Stakeholder Relationship Committee. I'll cover quickly because there is not much in this particular committee. It's a regulation 20 of LODR regulations. Okay. Now the listed entity shall have a stakeholder relationship committee to specifically look into various aspects of interest of shareholders, debenture holders, and another security holders. Okay. So to look into various requirements of other various stakeholders, this committee is required to be formed. Now the chairman or chairperson, usually in the regulations we use the word chairperson. The chairperson of the committee shall be a non-executive director. Okay, shall be a non-executive director. Now, at least 3 directors should be there, with 1 director being your independent director. So, minimum 3 directors are required in this committee. Okay, minimum 3 directors. Now, with at least one being independent director. With one being independent director. Okay, at least one. At least with one being independent director. So that is the case. Now, what if the company has the SR outstanding SR equity shares? Outstanding SR equity shares. If the company has the outstanding SR equity shares, then at least two-thirds of the stakeholder relationship committee shall comprise of independent director. Two-thirds shall be independent director. So if they have SR outstanding SR equity shares, at least two-thirds shall be your independent directors. In other case, when there is no SR outstanding, then at least one should be independent director. So I will mark this as an other. So in case of SR outstanding, at least two-thirds. Otherwise, it should be at least one independent director with minimum 3 directors as a member of the committee. Okay. So that is a requirement from the number of directorship in the stakeholder relationship committee. Regulation 22A. Regulation 22. Okay. So chairperson, regulation 20, minimum directors, regulation 22A, along with the optimum combination of the directors. Now, again, the meeting of the stakeholder relationship committee. So, stakeholder relationship committee shall meet at least once in a year. Meeting of stakeholder relationship committee at least once in a year. Okay. Once in a year, and the roles and responsibilities again are given for the stakeholder relationship committee in schedule 2 part D. Okay. So roles and responsibilities. Schedule 2 part D of regulation. I'll quickly take you through the basically the roles and responsibility of this particular committee. Okay. Now, the roles and responsibility, as I told you, are part of Schedule 3, Schedule 2 Part D. And Schedule 2 Part D not only talks about the responsibility of this committee, but other committees also. So there is a bifurcation which is given under the schedule itself, which talks about, various responsibilities of the committee. Part D. Okay. Remember in last lecture, we saw part D, roles of committee other than the audit committee, 19.4, 24 and 21.4. So 19.4 with respect to role of nomination and remuneration committee. 24 is the stakeholder relationship committee. Okay. So what is the roles and responsibility? Pretty much simple. There is nothing difficult here. That is The roles and responsibilities shall involve resolving grievance of the security holders of the listed entity, including complaints, transfer and transmission of share, non-receipt of annual report, non-receipt of declared dividend, issue of new share or duplicate certificate and general meetings. Review of measures taken for effective exercise of voting rights by shareholders. Review of adherence to the service standard adopted by listed entity in respect of various service being rendered by registrar and share transfer agent. Okay. And then review of various measures initiative taken by listed entity for reducing the quantum of unclaimed dividends and ensuring timely receipt of dividend warrants, annual report, statutory notice by the shareholder of the company. So these are the certain roles and responsibilities of stakeholder relationship committee. Pretty simple, nothing difficult. It's directly related with the grievance, providing details to the various stakeholders like shareholders, security holders, and other stakeholders of the company. So that is pretty much the stakeholder relationship committee. Okay, any doubt? Any doubt? Okay. This is regulation 23A with respect to the meeting. Okay. Now, quickly I'll cover another committee which is also of good importance, that is a risk management committee. Risk management committee, okay, which is again regulation 21 of SEBI LODR regulations. So regulation 20 is your stakeholder relationship committee, regulation 21 risk management committee, okay, and regulation 19 nomination and remuneration committee. So we have various committees under SEBI regulations. Okay, what this regulation says, regulation 21, that board of directors shall prepare a risk management committee. Now, the minimum there should be 3 members, with majority of them being board of directors and including at least 1 independent director. Okay, so minimum 3 members with majority being members of board of directors, being members of BOD. That means other person other than the directors can be member of risk management committee, but my majority of the members should be directors, that is the members of board of directors. Okay, minimum 3 members, majority should be board of directors. Fine. Now it should have at least 1 independent director. At least 1 independent director. Okay, fine. However, if the entity has outstanding SR equity shares, again, outstanding SR equity shares, then in that case, at least 2/3, at least 2/3 of the members of the committee, okay, shall comprise of independent director. At least 2/3 shall be independent director. Otherwise, like if there are no outstanding SR equity shares, in that case, at least one independent director. Otherwise, at least 2/3 of the independent members shall be independent director. Okay. Now, as I told you, other people can become member of the committee, but majority should be board of directors. Then the chairperson of the risk management committee shall be a member of board of directors, and senior executive of the listed entity may become member, but my chairman should be member of board of directors. Means he should be a director. The chairman or chairperson, rather, the term we use over here, of the committee shall be member of BOD. Okay. Chairperson shall be a member of BOD. So that is regulation 21(3). This is regulation 21(2). Okay. Now, again, very important point regarding the meeting of risk management committee. So, risk management committee shall meet twice a year, at least twice a year. Okay, shall meet at least twice a year. Now, if they are meeting twice a year, what should be the quorum? Now, for that, quorum should be 1/3, either 2 members or 1/3 of the members. Either 2 members or 1/3 members. Okay. Either 2 or 1/3 member, whichever is higher, and including at least 1 member of board of directors. And at least 1 BOD member. Okay, that should be my quorum. Now, regulation 21(3)(a) and 21(3)(b). Okay. Now, the meeting shall happen in such a way that there should not be more than 180 days between 2 meetings. So the gap between 2 meetings should not be more than 180 days. There should not be gap of more than 180 days between 2 meetings. Okay, so they are required to meet twice, but there should not be gap of more than 180 days between 2 meetings, which will ensure that in each half of the year you are at least meeting once. Okay, so if I remove this criteria of 180 days, it can happen that they are meeting continuously, like on 30th March and 31st March. twice a year done. But because of this, they are at least required to meet once in a half year, so that the gap between two meetings should not be more than 180 days. Again, the board of directors shall define the roles and responsibility of the risk management committee and such other functions that are provided to the risk management committee, which specifically now there is a cyber security also covers as a part of the risk management committee. Again, there is a part D schedule 2, which provides the roles and responsibility of the risk management committee. We'll see in a while. Okay. Now, the provisions of this regulation are applicable to the top 1,000 listed entities and high value debt listed entity. So this whole provision is applicable to one, that is 1,000 listed entities, top 1,000 listed entities. Second, high value debt listed entity. So if an entity is not from the top 1,000 listed entities or high value debt listed entity, the provisions of regulation 21 will not be applicable. So this is the applicability clause, you can say, okay, which talks about that this regulation will be applicable once if these if an entity falls out of any of these two categories. Okay, so let us quickly see the roles and responsibilities which are enumerated in part D of my schedule 2. So risk management committee, what is the roles and responsibility? We'll see quickly that to formulate detailed risk management policy, a framework for identification of internal and external risk faced by listed entity, which will include financial, operational, sectoral, sustainability, particularly ESG related, information, cybersecurity, or other risks as may be considered by the committee. Major risk mitigation, including systems and business continuity plan. This is a very trending area, BCP. Okay, it is considered one of the crucial for the corporates, the BCP plan and disaster recovery plans. Then we have to ensure appropriate methodology, process, and system in place for monitoring and evaluating risk, monitor and oversee implementation of risk management policy, periodically review the risk management policy at least once in 2 years, keep the board of directors informed about the nature and content of the discussions, recommendations or actions to be taken, appoint removal terms of remuneration of chief risk officer. Okay, if any, that will be subject to by the risk management committee. So there is a new, there's a we have a chief financial officer, a chief executive officer. So now we also have a chief risk officer nowadays in companies, and the appointment, remuneration, terms of appointment, and everything is being looked after by the risk management committee. Now the question is, there is one doubt, whether the chairman of the risk management committee is required to be a non-executive director. Answer is, it should be, it can be, but the provision talks about only the chairperson of the risk management committee shall be a member of board of directors. If it is not a non-executive director and being a director member of board of directors, it will be fine. So there is no compulsion that it should be a non-executive director. Okay. It's not a compulsion that it should be a non-executive director as per the provisions. Any doubt till now? Chairperson of the risk committee can be executive director. Now, another question or doubt is whether all the listed entities are required to establish these committees. See, each and every committee has their applicability. Like for example, risk management committee, if it is 1,000 listed entity or high value debt listed, then you are required to have risk management. Again, then stakeholder relationship committee, yes, every company is required to have listed entity. Then we saw nomination and remuneration committee. Is it necessary for all? Yes, each listed entity. Then we have audit committee. Audit committee, again, it's not only the listed entity, but there is a requirement of companies that to have audit committee in other than the listed entity also. Board of directors is by default you should. A company cannot function without board of directors. So that is mandatory for all. So that is till now a summary of applicabilities of all the committees and entities. Now, I'm going to discuss an important concept of Vigil mechanism. Vigil mechanism, again, I'll just give you a brief about the Vigil mechanism. Okay, because there is a requirement under SEBI LODR regulations, plus there is the same requirement in the company set. So I'll just provide us, simple brief about both. Okay. Now, as per my SEBI LODR regulations, okay, there is a regulation 22 which talks about establishing a vigil mechanism. So the listed entity shall formulate, okay, a vigil mechanism or you can say a whistleblower policy in the company, okay, for directors and employees to report the genuine concern. So that should be the case, that formulate a vigil mechanism or a whistleblower policy for directors and employees of the company. Now, this should provide adequate safeguard against victimization of directors or employee or any other person who avails the mechanism. Okay, and shall also provide direct access to the chairperson of the audit committee. So, the features should be of this mechanism is provide safeguard, direct access to chairperson of audit committee. Okay, these should be the minimum requirement of the vigil mechanism or whistleblower policies mechanisms requirement. Okay, features. Now that is regulation 22, which is pretty much contained and restricted and not that much provides the detail. But on the other hand, I have section 177 of the Companies Act. Now you will say section 177 is the audit committee. Yes, the section 177 is audit committee. But if you read 177 section 177 clause 9, okay, 177 9, then it talks about that every listed entity plus such other class of entities. So the other class of entities, or you can say companies. Here in Companies Act, we use the word companies, not entities. Every listed company and other class of companies. Okay. Shall establish a vigil mechanism. Shall establish a vigil mechanism for directors and employees to report their genuine concern. Okay. Then the vigil mechanism under subsection 9 shall provide for adequate safeguards against victimization and direct access to the chairperson. So that is same. This particular point again is same for under Companies Act also. So I'll repeat it. It shall provide adequate safeguard and direct access to audit committee chairperson. Fine. Plus, there is an additional requirement under the Companies Act that the mechanism shall be disclosed by the company on its website. Disclose mechanism on website of company. Okay. Plus in board report, website of company and in board's report. So you need to disclose about the mechanism. Okay. Now, there is one important thing that I need to discuss is such other class of companies. So in SEBI LODR, it is applicable to listed entity that is there. In Companies Act, it's listed entity plus such other class of companies. Now, which are these such other class of companies that we need to look into? Plus, there is some other requirement of vigil mechanism under Companies Act, which I'll discuss, which are prescribed under rules. Okay. So, this such other class of companies. I'll do star mark. Such other class will include companies which accept deposit, okay, then companies which have borrowed money, from banks or financial institution in excess of 50 crores, borrowed money from banks and FI, banks and public financial institutions in excess of rupees 50 crore, greater than rupees 50 crore. If that is the case, then yes, they are required to have the vigil mechanism. And why I am discussing this reason, because for such other classes of company, there is a mandate that the company shall establish an audit committee to look after the vigil mechanism. Again, now let's say, for example, there is a company which is not required to establish, let's say, audit committee based on the provisions of Companies Act. Okay, maybe let's say they have a public deposit, but they do not have a paid up share capital of more than 10 CR, turnover more than 100 CR, or outstanding loan more than 50 CR. Okay. Now, for those companies, let's say they are accepting deposits, but that is these conditions are not satisfied. In that case, they are not required to have audit committee. But by the way of Vigil mechanism, these companies are required to establish an audit committee. So the companies which are required to constitute an audit committee shall oversee the Vigil mechanism here. So they should have audit committee in the place. Okay. So audit committee is required to look after for the Vigil mechanism. Okay. In case of conflict of interest, there is, there could be changes of the committee members if there is a conflict of interest, but most probably audit committee is the one who is required to look after for the Vigil mechanism. Okay. Now, in case of companies, other companies, where either this Vigil mechanism is there, but they are not required to set up audit committee because of some exemption, or you can say they have set up voluntary Vigil mechanism. In that case, they can appoint board of directors, one of the board of directors to look after for the role of audit committee. Okay. So in case there is a no mandate for the audit committee, or it's a voluntary Vigil mechanism, or it's a case where there is not required to have audit committee, in that case, board of directors can appoint any one of them, nominate a director to play the role of audit committee. Again, the rest is the same, that there should be safeguard and everything. So that is a very important part, that if a company falls under this category, borrowed fund or something like that, public deposit, so by default it has to be, it has to create audit committee for the look after, because it will fall under the category of the audit committee also. Now, safeguard against what? So safeguard against victimization. So let's say, for example, whistleblower policy. I identified the director is doing something wrong. I went and I blowed the whistle. Okay. I used the mechanism and I reported that, okay, there is something going wrong. Now, director came to know about it. And as a part of revenge, I was either demoted or either I was removed from the company. So the safeguard is against that victimization, that no retaliation should happen from the side of director. And if I'm filing any complaint or using the mechanism about a person, then the person should not be, made aware till the time it is necessary for, discussion or investigation or taking action. So that is something, the safeguard against victimization. Now, what is the difference between Vigil mechanism and whistleblower policy? Vigil mechanism is something that, a mechanism to look after if there is anything going wrong or something like that. Wherein the whistleblower policy, you give an option to the directors or employee to report, if anything they identify wrong. So there's a slight difference between both of them. The purpose is same, to look if there's something is going wrong or not. Clear? Any doubt? Any doubt, guys? Okay. Now, the next part that I want to discuss is about the related party transactions. Okay, very important, in the last part that I want to discuss, related party transaction. And that is under Regulation 23 of SEBI LODR regulations. Okay. Because under the related party transaction, there is some roles and responsibility, okay, of the entity, and that we will discuss now. Under Regulation 23, every listed company is required to formulate a policy on the materiality of the related party transaction and dealing with the related party transaction, including thresholds for the approval by the board of directors and review for the board of directors. That whole policy is required to be, reviewed by the board of directors at least once every 3 years and updated accordingly. So, first, regulation says that formulate a policy which shall contain detail about materiality of of related party transaction, thresholds, limits for approval, okay, and other details with respect to dealing with related party transactions. And this policy shall be reviewed by board of directors at least once in a 3 years. And update it accordingly. Okay, so that is my regulation 23(1). Now, there is one more point to this. When they are talking about materiality of the related party transaction, the regulation itself provides that what is material. Okay, I cannot go below that as a materiality, but what is material? So, the term materiality of the related party transaction, or you can say material related party transaction. What is material as per the regulation itself is a transaction with the related party shall be considered material if that transaction entered individually or together with previous transactions. Entered individually or together with previous transactions. Okay. During financial year exceeds rupees 1000 crore, exceeds rupees 1000 crore, or just or 10% exceeds 10% of the annual consolidated turnover. Exceeds 10% of the annual consolidated turnover of the listed entity as per last audited financial statement. As per last audited FS. Okay. And we need to consider the materiality between both of them, whichever is lower. So either 1000 CR or 10% of the annual consolidated turnover will be considered as a material, whichever is lower will be considered as a material transaction. And this was amended from 1/4/2022. So there is a change. You can say this is being amended from 1/4/2022. Yeah, with effect from so last year it was amended. So that's why it's a bit of important. the materiality of the related party transaction. I will consider material if that transaction entered individually or together with the previous transaction during the financial year, if it exceeds rupees 1000 CR or 10% of the annual consolidated turnover of the listed entity as per last audited financial statement. Okay. In that case, I will consider that transaction as a material. Now, there is an exception to this. There is an exception to this, where there is a payment made to related party for the brand usage or the royalty. Exception: if payment made to related party for brand usage / royalty, okay, the materiality condition will be only if it exceeds 5% of the annual consolidated turnover as per the last audited financial statement. So instead of 10%, it will become 5%. Instead of 10%, it will become 5%. Okay. And accordingly, this percentage will be used for brand royalty and payment of brand usage and royalty. Okay, so there is no lower of which or 1000 crore applicable in the current case. Now, why we are looking for the material related party transactions? Okay, what is the reason for material related party transaction? Now, the reason for the material related party transaction is that all related party transactions and subsequent material modification shall require approval of audit committee. Okay, require prior approval of audit committee. So all RPT plus subsequent material modification require prior approval of audit committee. Okay, and only independent directors of the audit committee shall approve. Prior approval of audit committee plus they should be independent directors. Only independent directors shall approve. Okay. Now, when I talk about material modification, then as I told you, we need to look into the materiality concept. Either it is designed by the lower threshold designed by the policy or the provision itself which is given. Okay. A related party transaction to which subsidiary of a listed entity is a party. Okay. But listed entity is not a party. Those related party transactions are also require prior approval of audit committee of listed entity if the value of such transaction exceeds 10% of the consolidated turnover. So when I talk about related party transactions, it's not only the related party transaction of the entity, but it involves subsidiary of a listed entity. It involves subsidiary of listed entity Okay. It involves subsidiary of listed entity where even listed entity not part of the transaction. Even when listed entity is not part of transaction. Now there is an exception to this, which is non-material transactions does not require approval. Okay, means the transaction which are material, materiality again 10% of annual consolidated turnover or 1000 crore. If that is the case, and even when the listed entity is not part of the related party transaction, only subsidiaries are part of related party transaction, then the audit committee of listed entity is required to approve that transaction. Again, audit committee of listed entity is required to approve that transaction. Okay. Now, there are other provisions with respect to the related party transaction that the audit committee can provide omnibus approval. Okay, they need to satisfy what is the requirement of omnibus approval and everything. Quarterly reviewing of transactions. So there are other things also which I will not go in much detail because those are more of operational nature. Okay, but this is the main that I wanted to discuss about the related party transaction, their limits. Any doubt till now? Any doubt? Okay. So in case of a subsidiary, let's say for example, I'll explain with an example. Okay, I'll explain with you example. Let's say listed A is a listed entity, A Limited, listed entity. Now B Limited, not listed, subsidiary, and C Limited, again subsidiary, and list. Let's say a subsidiary also, but listed also. Okay. Now, what the provision says that if two related parties, means two subsidiaries, okay, are having a transaction which is more than 10% of consolidated turnover, if they are having a related party transaction which is more than 10% of consolidated turnover, in that case, this transaction requires prior approval of audit committee of A Limited. A Limited's audit committee, because this is a holding company and this is a subsidiary companies. So if there is a transaction between B and C Limited, okay, which is more than 10% of the consolidated turnover as per the last audited financial statement, means becomes material RPT, material related party transaction, that requires prior approval. Clear? Any doubt now with respect to this subsidiary one? Any doubt? Okay. Now, there is one more exception to this. And that exception here in the current case is of basically, there is a requirement, okay, applicability requirement, wherein the listed entity is having a paid up share capital not exceeding 10 crore, net worth not exceeding 25 crore on the last day of a financial year. If that is the case, then the provisions are not applicable. These provisions are not applicable. So another exception is if my paid up share capital is less than 10 CR plus net worth less than 25 CR. If that is the case, then I'm not required to apply. So this is another exception. Either it should be a non-material transaction, or if the paid up share capital or net worth of the subsidiary is less than 25 CR. So if in this case, okay, let's say this listed entity, okay, it has paid up share capital less than 25 CR and net worth less than, paid up share capital less than 10 CR and net worth less than 25 CR. In that case, this particular approval is not required. This particular approval is not required. Now, why? Reason, because I'll tell you. This is a one specific exemption. The reason, because there is a provision, regulation 15.2, okay, that I kept for the last. Very important regulation. Which is known as a specific exemption. Okay, which is known as a specific exemption. What regulation 15.2 talks about? Regulation 15.2 says that regulation 17, 17A, 18, 19, 20, 21, 22, 23, 24, 24A, 25, 26, 27. Okay. Then clause B2I of regulation 46.2 plus part C, D, E of schedule 5, that is the whole thing that we have discussed now, is not applicable. Is not applicable when a listed entity has paid up share capital not exceeding rupees 10 CR and net worth not exceeding rupees 25 CR as per last day of previous financial year. If that is the case, okay, if that is the case, then this particular provisions are not applicable. A specific exemption is there, and this specific exemption based on which this there is an exemption in related party also. Okay, so because of this specific exemption, a exemption in a related party and other provisions also come. A bit of you can say, I talked about the specific exemption of a non-material related party transaction which is within the provision, and an exemption which is contained outside the provision and other regulation, which also applicable to various regulations. So this is a particular scenario over here where there is a related party transaction. There is one doubt. Okay, one question being asked. What if B and C both are unlisted, not listed? In that case, this will not be applicable. One subsidiary has to be unlisted so that this particular provision can be applied. If both are listed, then this provision will not applicable. Sorry, both are not listed, then this provision will not be applicable. There should be a listed subsidiary. Okay. But if again, now the question is whether, okay, there is another question. What if both are the listed, unlisted subsidiaries and the transaction value exceed 10% of the consolidated turnover? No, in that case, it will be applicable. In that case, it will be applicable. Okay. If there is an exemption and both are not listed, like you have an exemption available, plus they are not listed, then only it will go out of the picture and approval will not require. But if there is no exemption and the transaction value is there, means a material related party transaction is there, still this will be applicable. A prior approval of listed entities audit committee is required. So let's say, for example, the transaction is material. Okay. If let's say, for example, another example I'll take. Again, A Limited holding, B Limited and C Limited. Both are unlisted. No exemption is available. Okay. No exemption is available and the related party transaction is material. Then again, approval is required of audit committee of holding. Okay. So if there is an exemption, then only I can say, okay, the approval will not be required. But if exemption is not there, even though both are unlisted, approval will be required. Any doubt? Any doubt with respect to the related party transaction? See, the concept here is approval for the material related party transactions is required. Okay. Even though the listed entity is not part of the transaction. However, there are certain exceptions if that is not a material related party transaction or general specific exemption is applicable. If that is the case, then only I don't require approval. Otherwise, I require approval. Okay. Any doubt, guys? Any doubt? Okay. If no doubts, then guys, I request everyone to provide your feedback. That is very important for me. Plus, remember in the last lecture, even I told you to read the regulations because of the technicality involved. Okay, a reading is required. I'll again suggest after this lecture, please go and read the lecture, read the regulations specifically, study material specifically, so that you can have the clarity if you are not read before. Okay, because of the technicality involved, it is very important that you read the regulations. Okay, also please provide your feedback. It is very, very important for me, very important. If no further doubts, then that's it from my side for this particular topic, guys. I have tried to cover as much as I can in much detail with the practical examples for your clarity that how in actual life also these things work. Okay. Okay, guys. Thank you. Thank you for your time. I'll see you in the next lecture, and please be prepared for the next lecture also, so that you can have understanding when I will be discussing with the provisions. Okay. So be prepared for the next lecture, which is on the Thursday. And please read that topic well in advance. Be prepared for the topic. Okay. Thank you, guys. Thank you for your time. And also one more thing, from the institute side, Karuna madam will also be there in that particular lecture for your guidance. So be prepared and please attend that lecture. Very important. Okay, guys. Thank you. Thank you for your time. I'll see you in the next lecture.
थैंक यू सर.
थैंक यू मैम.
मैं कल आपको बिलिंग का भी बताऊंगी हर्षद.
चलेगा ना मैम.